It's recording. So what this
Okay.
tax policy is saying that there are the principles that we must follow, that must be followed whenever we want to implement new tax
Absolutely.
law, right? Or even when we want to amend
Administer
existing tax law,
that.
and whenever we want to administer taxes. When we talk about administering taxes, we are talking about collecting tax and ensuring compliance. So that tax policy is just a principle that tells us that whenever tax laws is to be implemented, yeah, there must be within the framework of the principles that was
Of
stated
tax.
in the tax policy. So that means that any tax law that wants to be implemented, right, must be within the objective or the framework of what the of the principle that is being that is being stated by the tax in the tax policy. Are we together?
Teacher, I can't hear you.
You
We are
cannot hear me.
together. You are not talking.
Do you get the this thing now?
Yes.
So we look at tax laws. We look at tax laws. We said tax laws are legal rules put in place to achieve tax policy and objective of the government. So when we talk about tax law, we are looking at um, legal rules that must be followed. When we talk about tax policy, we are looking at principle. So that tax policy is saying this is the my network. Can you hear me?
Can hear you.
You can hear me?
Yes.
Okay. So that tax tax policy is saying guiding principles, right? Tax law is saying the legal rules that we need to put in place in order to what achieve what tax policy
That's right.
and objective. So this is how the thing works. This is how the thing works. There is a tax policy already, which is giving us a guide and a principle, which is giving us a guide and a principle.
Mhm.
Whenever we want to make tax law, our tax law must be in line with the principle
It's our
that is
tax
being
policy.
stated in the tax policy. Do you get?
Okay. Yes.
It must be within the principle that is being stated by the tax policy. Now, what is this tax law now doing? The tax law is now giving us a legal rule. So that legal rule, it is what we need to abide by when we are administrating taxes.
That's
It's like that thing is from one to other, right? There is tax
yes.
policy, right?
That's your
Which gives
tax.
a principle. This which gives a principle, a framework. Do you get? A framework.
How tax should be implemented.
What do you say?
I said on how tax should be implemented.
It to be implemented. Now, we now said tax law. Now, when we are making the tax law, we need to make reference to the guiding principle, which is the tax policy, right? And the tax law, they are in form of legal rules. And we need to abide to the tax law when we are administering taxes, which is tax administration. So from tax law, from tax policy, we move to tax law, we move to tax administration. Now, example of the tax law, they are the company income tax. Company income tax, Cap 21, LFN 2004. The Personal Income Tax Act, Cap 8, LFN 2004. The Petroleum Profit Tax Act, Cap 13, LFN. They are legal rules. Okay, for instance, now if you look at the company income tax, now it's exempted a small company from paying tax, right? Is exempted
Yes.
a small company from paying tax. And I can say this can be one way or the other likened to the principle of, let me say conveniency or equity, ability to pay is a principle.
Yeah.
So they see that a small company is
It's
has
just coming up. They can't pay tax.
yeah, exactly. They have a revenue of 25 million and less. So when we charge them tax, it's like we are putting more burden on them, right?
On them.
So there is a principle that is saying tax should be based on ability to pay. So it is generally assumed that small company might not be able to pay. That's why we are not bringing a tax law that says small companies should be exempted from paying tax.
Tax.
Do you see now? You know that tax law that is saying small companies should be exempted from paying tax is within the framework of that tax policy, a guiding principle.
Mm.
Are we following?
Yes.
Now, if you are now about to administer taxes and you look at a company revenue and you saw that they make 25 million and less, you won't impose tax on them. That's tax admin. So you don't expect that company to pay. So when we are administering that tax, we are making reference to the tax law, and that tax law that is being made is in line with the tax policy.
Policy. Administer tax law in line with tax policy.
That concept,
Yeah,
do
I
you get
get.
that
We
concept?
administer, yes, we administer tax law in line with tax policy. Simple.
I can hear you.
I said administration of tax. Tax system is administering tax law in line with tax policy. That is all about tax system.
Yes. Yes. Please give me 1 minute, please.
All right.
Okay, now I just want to shape in this. Actually, it is for advanced class, but I just want you to have a clear understanding. Do you get?
Mm.
When you get to the advanced class, they will teach you Nigerian tax policy, which is the tax policy that we are looking at here, right? They will take you
Okay.
the objective and they will take you guiding principle. The guiding principle is similar, or let me say is similar to the principle we'll be looking shortly after this. So one of the guiding principle is talking about fairness or equality or equity, which means ability to pay, right?
to pay.
Right?
Yes,
That is a policy. It is a principle. It's saying, wow, Ologbeni, tax should be based on ability to pay.
pay.
So now, if I want to make a tax law, maybe in my company income tax, and I said, let's change our company income tax from 30% to 50%. Am I in line with the tax policy?
No.
Because company might not be able to pay, right?
Yes.
That is it. So you are making this tax law in line with what the guiding principle as specified in the tax policy. So now let's come to now administration. Oh, let's now assume that okay, let's now assume that oh okay, they should pay 35%, right? It's their ability to pay. They should pay 35%. Now, when we are now administering tax on a self-assessment, a company now declare an amount of tax liability, like they said this is what they are to pay as tax. When you now look at the basis of the computation, you now saw 30%, right? Then the tax authority will look and see, and ṣebí àwa láti ṣòfin pé it is 35% now. Why are you still using 30%? Do you get? So when you are
Yes.
administering that tax, you are making reference back to relevant tax law. So get Ben.
Yes.
But when you are making tax law, you are making reference back to tax policy.
See.
Bó ṣe bó ṣe wà nìyẹn. So that tax policy will give you the principle that must be followed in order to implement taxes so that objective can be achieved, the national goals can be achieved. At least their objective of this national tax policy, they are about 5 in numbers. When you get to the advanced class, you see them. So it is not saying this is the guiding principle you must follow, right? In order to
Mm.
implement tax, regulate, and do all of this. So tax law is now saying this is the legal rule that you must abide to in order to achieve tax policy or objective of the government. Do you get? So when you are making the tax law, you will make it in the framework that is being provided by the tax policy. Do you get? So when we now talk
Yes.
about tax administration, it's talking about the process of you collecting and ensuring, you can see, ensuring the application of tax law.
Mm. Even when you are collecting tax, ensure that your collection process is in line with tax law.
Tax law. That's just it. Why those people that are now the body that are now in charge of the administration of the taxes, they are the Federal Inland Revenue Service, State Internal Revenue Service, and the Local Government Committee. Any question before we proceed?
No, no question. I'm fine. No question. Can
Are you
proceed.
so are you can you now explain tax policy, tax law, tax administration?
Yes, I can.
Okay, that's fine. That's fine. So let's look at concepts in tax. Concepts in tax. Now, first concept we are going to be looking at is tax base. When we talk about tax base, what should come to your mind is objects. Do you get objects,
Yes.
right? Object. Because if you want to impose tax, we are going to impose tax on something. That something is called objects. That object is what
Tax
we call tax base.
base.
Do you get? If I impose
Yes.
tax on your income is an object, which is your what? Tax base.
Base.
If I impose tax on, let me say, if I impose tax on on the
Assets.
on your asset is the object and it is the tax base.
Base.
So when we talk about tax base, we are referring to objects upon which tax is what? Imposed.
Imposed.
I can impose a tax on your income. I can say pay 30% of your income as tax. Your income is the object, which is the tax base. So that's what I was referring to when I was explaining proportional tax, that I said the tax remain fixed irrespective of changes in tax base. And I told you that tax base is a concept we need to look at. So and I said for now, I will just say it is a tax that remain fixed irrespective of changes in income. That income in quotes is a tax base. It is an object, is a tax base because it is upon that income our tax is imposed. Do you get that?
Yes.
Now we talk about rates. Another name for tax rate is called tax burden ratio. We have tax burden, right? We have tax burden ratio. When we talk about tax burden ratio, we talk about tax rates, right?
Tax.
So it is the proportion of the tax you are paying to the government, which is expressed in form of percentage. If I say pay 10% of your income as tax, the rate of what you are paying as tax is 10%. That is tax rate. Are you following?
Yes.
Your VAT rate of 7.5% is a tax rate, is a tax burden ratio, because that is what they will charge on your tax base. So that rate that they charge on your tax base is the tax burden ratio, which is known as what? Also known as what? Tax
Tax rate.
rate. You get?
Yes.
So we said tax yield. Tax yield is the amount of revenue generated from tax they imposed. They impose tax on Mr. A, Mr. B, Mr. C, Mr. D, Mr. E, Mr. F, company A, company B, company C. The amount, the total amount they generated from them, the total amount of revenue they generated from the tax that was imposed by each individual is the called tax yield, or you call it tax revenue. Do you get?
Yes.
We also talk about tax incidence. You talk about tax incidence. Now, when you talk about tax incidence, we are talking about tax burden. We are still coming to tax burden. Tax incidence is talking about sharing of tax burden between buyer and seller. Are you following?
Yes.
Now, when we are talking about tax burden, we are saying we are saying who ultimately bear the burden of a tax. Now, when you talk about direct tax, the burden of that tax is beared by the person that is paying it, right?
Yes.
So now when you're not talking about tax incidents, you are saying who ultimately bears the burden of that tax. Who bears the burden of that what? Of that tax. That's what we are talking about, tax incidents. So that's why we say it is sharing of tax burden between buyer and what? And
Seller.
seller. Now for indirect tax now, the tax burden is borne by the buyer. Why? Because for indirect tax, you are saying consumption of goods. Okay, for instance, now if they impose VAT on invertible items, right? If they impose VAT on a vertible item, it is really the buyer that bears the burden. Why? Because that item will come to us in form of high prices. Are you following?
Yes.
So it will come to us in form of high prices. So we are the one bearing the burden. So the incidence of that tax is on us. So we now talk about tax burden. So tax burden is just talking about the amount of income, property, and consumption tax that is levied on individual and or businesses. We said tax rate is a tax burden ratio. So when you apply your tax burden ratio on your tax base, you should have the amount you are paying as income, which is the tax burden.
I don't understand though. Sorry, come again.
I said tax burden is the amount of income, property, or consumption that is levied on individual. Okay, for instance, if I'm being levied 10% of my on my income of 1 million, I am paying 100,000, right? That
Yes.
100,000 is a burden to me. That is tax burden. Are you
Okay.
following?
Yes.
So that is tax burden to me. So we also have tax impact, right? Tax impact is just talking about the effect of tax